Hello, good evening, everybody. I did promise that he is going to be uh, very revealing this evening, and I'll be posting this for all of you to see. Um, it's a very rare privilege that you have for me to do this with you, a very rare privilege, and that is what it is. And you can learn a whole lot from what we are seeing here. You can learn a whole lot. So it's going to be revealing. This is DXY. I'm going to be using DXY to teach us something. And again, I'm going to be very fast at it. And I would also expect all of you to, go over the video, watch over and over, and see the sentiment here and how, we do things. Now, if you take a look at this, it depends on the chart that you are using, because not all of these charts capture the same thing. Not all of the charts actually capture the same thing. So it might be a bit different if you're using Ohando or you're using they're different, because some actually might just start from exactly this point. Uh, you might not be able to see these, but I want you to say something, and let me just bring something out to divide where I want you to pay attention to. I hope we won't have too much of itches here today. Um, the internet is really slow. It's very slow. I hope I'm not going to be having issues. So just like I said, from this point here, this is a downtrend, and this is an upper trend, which is more or less a recovery of the old move from here to this point. That is what pretty much we are seeing here. A recovery from here down to this low, then a recovery. So it's like a correction of the entire move. So the move actually took a small time, and the price came down here and a recovery. So what you are seeing here, it's more or less like a mirror, but more of like a small mirror. Let me use that word, if I may use that. If I may use that, let me see how I can divide this so that you get what I'm trying to say. Now, if you, from this point, let's divide that. Let me use something to divide that. Let me use this to divide that. Okay, so up to this point, up to that point, again, up to these points, that, and up to this, up to this point. Okay, and now let me use this. me use what I think to be more visible to you. Now, these are weekly chart of DXY. DXY, it's more like the strength meter of the dollar. Yeah, the strength meter of the dollar. And you can see the way it's been. So if it goes down, it means the dollar is weak. And if it rises, it means the dollar is strong. That is what you see. So the dollar, went so weak, down to this point, between 1985 January, and it hit the lowest low around 1992. So 85 to 92, that's like a 7 years period. And the recovery from that 92 till to June 2001, that's a whole lot, about 9 years. Okay, so you can see a 9 years recovery. It slipped down for 7 years. It recovered 9 years before we have it go down again between 2000 January 2001 till April 2008. But where we are going to be paying our attention to is what actually happened, Now, what I want you to see exactly is that you will find out that, let me do something for you. You will find out that whatever we are seeing around this area, yes, whatever we are seeing around this area, whatever we are seeing around this area here, what mirrors what we are seeing in this area. So it quite mirrors it. Whatever we are seeing quite mirrors it. And these move to the downside, and these move to the downside. So the move to the downside, you can see, and the recovery, the shape, the way it came down, and the way this one came down here, and the way we have this correction, you can see the correction here and the correction here is pretty similar. And the way it was going up here and what we are having here is pretty similar. So now, what we tell ourselves is the beginning of a move to the downside, and it was coming down, and the lowest low that it made, that tells you that is a move. And I'm showing you a super cycle. From here itself is a cycle. So we can say this is a cycle, this also is a cycle, this is a cycle, and what we are seeing here is another cycle that has not expired, maybe about expiring. So it's a cycle. The move up here is a cycle, and the move down here is a cycle. So you can imagine if you're going to have a grand cycle, it's a couple of, a super cycle. It's a combination of cycles, and it has its own years that you say, okay, it's this. And before you now have a grand cycle. So it's a cycle here, and we must understand what a cycle is. So a cycle is this move. A cycle is this move. A cycle also is this move. 1, 2 cycles, 3 cycles, and this is the 4th cycle. So pretty much the recovery here, and we're going to also look at the recovery that this one is making in respect to this. So I will be shifting away. I haven't said that. I will be shifting away from here. I'll be shifting away. I just use these. I'll be shifting away from that. So We shift away from what I just showed you, and we're going to pay attention only to this part after this move and the lowest low that the price made here. We're going to be shifting attention and the recovery that we are having. So if we are going to do that, so we take this. This has been the low here. Let me use this. And another low. So the high here there and the low here. So that's the low here. Now, we are going to see what recovery this one is making in respect to this one, and where price is going to go to or not. For now, in terms of field retracement, this is what we have in terms of retracement of the entire move. So the price is about a 76, is about 76 of the old entire move. And which is means that this thing is actually bullish to have recovered that much. It's bullish. Where is it going to go to? Are we going to come to parity to this level or break above it? I don't know. And I can't speculate where it's going to stall. If it's going to stall here or here or here. That is one thing and how I want us to engage our brain. The recovery does not mean, because at this point, it does not mean it can stall anywhere. So we don't know where it's going to stall. But the secret of where this thing is likely to stall is locked in this wave. So now, I will now be dividing this section. I will be dividing this section as the point of a new wave here, just around here, the point of a new wave, and the end of this wave, which is around this place. Okay, so if you see that the distance between here and here compared to where we are now, and where we don't know where the date is going to end. This is 2001 November, and around February 2008, that's like 7 years. Just like the first cycle did 7 years and the recovery was like 9 years. Of course, this one is more than that, because today, this is 2022, and 2022, if you remove 8 years of that, then that's like 14 years already. So 14 years, this thing has been recovering. So the price, the dollar has been on the high for like 14 years. Now, what I gave us when I was looking at a particular strength, and I limited myself to these, is going to change a bit. It's going to change, and we are going to see how it's going to change, really. It's going to change, and we're going to see how it's going to change. Now, this one looks to be running like a 5-wave structure, though it's corrective. It's not quite impulsive like you have it here, but it's a trend, and this is also a trend, and the way it's going up also is a trend. So, and if I may, and if you want to do it, let's see, this is how we look at it. Right from this point to this level marks a wave, which is wave one. Wave one. Wave one, I want you to see that. And from that level down to this level is wave two. Down to that level is wave two. Let me use something that You will see very well. I think if you like this, and of course, there's no way you can give me feedback. And the wave 3, it's from this level up to this level, up to this level, up to this level. That's the third one. And the fourth is from here up to this level. I hope you see that. And the fifth of the wave is now from here to where we don't know is going to end. Now, this is pretty much like a 5-wave structure. This is pretty much a 5-wave structure, which it's unfolding in front of us. And this will now change our perception and change the way we are looking at this wave. And to know that if we think that this is A and a B and a C, that has changed it completely because it's a 5-wave structure. And this is what would help you. This is what will help you. Now, with this, because it's the beginning of a new wave, we can turn this to a black. We turn that to a black. So we now see that wave 1, a wave 2, a wave 3, a wave 4, a wave 5. And really, because I looked at this wave, I studied it, it fits into perfection because it's corrective, you know, and you understand why wave 4 can be in the territory of wave 1 because it's actually corrective, unlike an impulsive that you wouldn't expect it to be in the territory of wave 1. So when it's corrective, it can be in the territory of wave 1, but it has a limit. So that's what I want you to see. And this is not as if, oh, one is trying to Jomo. It's not that here. If you understand what I mean, Jomo, it's not Jomo at all. Now, this is the limit of wave 1, and here is the low of wave 2, which I'll be showing you later. The low of wave 2. And your understanding here is going to be key. It's going to be key. Your understanding here is going to be key to your success. And here is wave 3. So we have wave 1, wave 2, wave 3, and the low here, because I said it's corrective, it's in the territory of wave 1. So that's the low there. And now we don't know where this one is going. So let me now take this off to see that it's a 5-wave structure that we are seeing. That's pretty much a 5-wave structure that we are seeing. And this is a cycle. And when you see the cycle, that is when, after that is when you now begin to look into the inside to see the structure of the wave. So we are actually on the last wave. Where it's going to end, we'll see. Okay, so now let me now enlarge this a bit. Maybe I should first label this wave. I should first label this wave as a 1, a 1. So a 2, a 2, a 3, a 4, and a 5. And that's the last of the wave. Now, so a 1 terminates up here. A 2 terminates down here. Go and do it's actually measured right, and a 3 terminates here. A 4 terminates here, and a 5 is what we are looking at. A 5 is what we are looking at. So you can see how this thing went up. Now, so let's dig more into it. Let's dig more into it. This move started February, around February. If I push this one a bit, around February 2008. So if we want to expand a bit, so this one goes a bit low. It might be difficult for you to see. Yeah, it goes a bit lower than that. And this one also, pinpoint measurement might be difficult on a higher time frame. And these pretty much looks like okay. Now, we say that this has to be within not more than 85. Mark Q is an higher time frame retracement, and from here up there, the recovery is pretty much like 85. So there. So now the 2 here, it's actually a flat. So where we see this as an A, that's an A. A B, and a C. I'm taking this pen to explain so that once I do this, you will understand. I can't go to the internal structures of the way that's been done, but just to help your understanding, I can't be measuring all these flats for you. The B wave and the C wave to complete 2, and the price sailed. So pretty much the internal structure of, so this one will still go for 1 and 2, but this one, for it to go for 3, then it has to extend beyond at least 161.8. And let's see if we have that for a 3. If we have that for a 3, from 1 to the end of 1 to 2. So a 61.8 is actually here where my cursor is, yeah. So the price went a bit beyond 161.8, so which makes that a 3, and it qualifies for a 3. And of course, a 4 must not be more than 50. So let's see if a 4 is not more than 50. From a 2 to a 3 should give us a 4 exactly at 50. So you can see exactly at 50 is touching at 50, and that is where we have it. So that also qualifies for a 50. So a corrective wave going up also, in this manner, 1 and 2 and a 3 and a 4. So what are you waiting for? What are you looking for? If we have a 5-way structure to the upside, though, is corrective, and definitely this is going to be the 5th and the last wave. So where do we expect this to stop? That is the question. The fact that it has broken beyond 3 tells you Yes, this is impulsive, and we are going to be seeing the inside of this wave. Now, what do we know of the last wave? What we know of the last wave is that it's an extension of 3 to 4 by 1.26 or not more than 1.618. So in that case, if we come here and we pick at 3 and we go to 4, now we'll say 1.26 or 1.27 exactly is at this level. Is at this level. Now, so the price had breached that. And so 1.16 that we don't expect the price to go beyond is at this level. So if you want to say anything, we will say that in terms of what we know, these two levels are the blue zone. This one has been breached. This one has been breached now. So this zone here is a blue zone for downside. That is what we are saying. But what you have in locked there, it's huge. So because it's a blue zone, permit me to use this. It's a blue zone. Now, as far as we are concerned, that we can say that we have finished this wave to the upside, and dollar can turn down any minute, any moment. But at what point are we going to see that? Now, our knowledge of this internal structure here is what is key and going to help us to know where it's going to end. It's as simple as that, our knowledge. Now, just like we did for wave 2, before I go further, this is A, the first leg of wave 2, the A, and the B leg of wave 4, rather, the B leg of wave 4, and the C leg of wave 4. That's the C leg of wave 4. So that has changed what I taught you, because looking at the grand cycle, I mean, at the cycle, because you have to look at the cycle, you know, we gain all these things, knowledge from time to time. The knowledge of the grand cycle, you know, actually changed the labeling here, you know, and this is not the A and a B, and that we are seeing a C, because that was what I postulated, that this is an A, B, and a C. So actually, this is an A and a B and a C. So this one is 5 wave to the downside, a 5 wave structure to the downside, a 1, a 2, a 3, a 4, and a 5. And so we now have this one in the middle. We now have another 5 wave to the downside here, you know. This is proper 5 wave to the downside. You know, one can say this one is not a 5 wave, but to me, it still looks more like a 5 wave. 1, 2, a 3, a 4, and a 5 too. So now, looking at this, we know that we are in the area, in the neighborhood where we are going to finish this wave, but the wave can still go as far as entering this area. That is what we can see here now. Now, with these, we pay our attention to whatever that is happening within this wave. So that's where we pay our attention. We pay our attention to whatever is happening within that. So now we know for sure that this is the limit. The price had gone, got to 109 and installed, and we have this reversal, or we probably, is it a reversal or not? We are not sure if it's a reversal or not, because price has a potential of still getting to 113,400. So if we are to go up further, and that is the area I'll be looking for price to turn down. Now, having said this will change your life forever. Potentially, it will change your life forever. Having this knowledge, it will potentially change your life forever. So we can see we are within the last week. So that is what I want to show us. Now, let me just go to an area that I've completed the labeling for us to see. Now, voila. So this is where we are. So this is where we are. So you can see pretty much like unlike the other one, some other waves were probably not captured, but like this and all of that. So, and I would have preferred to put it here to show us that this is the beginning of a new wave. That's the beginning of a new cycle. So we have to look at the cycle. So the cycle is clear to us. And so we are now going inside of the structure to see. So we are not going, okay, permit me also to put in the blue zone. Because it depends on, that is one thing about who is the broker, who has created this chart. The first chart that we saw something like between 1 and 13,400. And this one, it's pulling back at 113,200. So you can see a difference of almost 200 pips in this thing. So because if you look at this I think, is it Orlando or whatever? So if you look at here, from this bit down to where 4. So you can see this is 1.6 and this is exactly, okay. I think I put this one at, okay, this is about, of course, yeah, it's still the blue zone. It's still the blue zone. So probably I didn't just write on, it's still the blue zone. So what we are saying is that we expect, let me just put that blue zone there again. So let me create that blue zone here again. Within that space, price should begin to fall. So, but it's a very big thing that you are seeing. Very big area, very big. And that is why you can't just, that small thing you are looking at is enough to crash your $1,000 account. To crash it. To crash it. So now going inside of here, this is still weekly. Go inside of here, you can see this is wave 1 and a wave 2, and we said it looks as if we finished with 3. We are finished with 3 and we expect with 4. That is what we're saying. These came down, a wave from here to this point came down as a zigzag correction in the internal social of the 3 of 3 and the 4 of 3. These are internal social of 3. And this also came down, wave 2 came down here as, because this is not a cycle anymore. So we have toned down, then it is zigzag here, up and down here. It's a zigzag correction like that here. And we have this move to the upside here. So, and this is the way the correction is going to look. It's only when you now go into the, internal architecture, probably you break it down to the daily candle formation or 4-hourly. That is when you now see A, B, C again in this area. Otherwise, you won't see it. Now, this also, for us, this looks pretty much like the end of 3-5 here. So from what we can see here, this pretty much looks like a 3-3-3-4. So this looks like the end of 3-5, and that we are doing a major fall of this particular wave to the downside. That is what it's looking like, and we're going to finish up with 5. The reason why we know that this cannot be a wave 5 of this run, this rally, it's because there's no divergence. We expect a divergence like this. So to rally up, because this is a leading diagonal to the upside. So we expect an ending diagonal, so which is going to run off, more or less, closer here. So that is not what we are seeing. And let me break it down to a, so that's the daily. That's the daily candle. So from the purple line here, and if we expect a fall to come down, this is where I wanted to, it's getting interesting. If we expect a fall to come down from that purple line, where is the 2 here? So pay attention to this one. So a 1 moved up from here to this point, and a 2 bounced up the black line here. So that is where a 2 bounced up. So if we want to get where a 4 should stall, ideally, then you should take it from that 2 to the upside, and it shouldn't go beyond a 50. That's where we have this. And where we expect an upside really should be in between this blue zone here, a 38 and a 23 to the upside, to say we have finished the 4th wave. That is a big 4. I want you to pay attention to what analysis I'm giving here now. So this blue zone here, if I want to create that zone again, the zone for more upside, the zone temporarily for more upside will now be this area. This is where we expect a temporal, if I use this, is this better? Okay, I think this is better, so that it shades clearly better from this one up here. This is a big level for us to come to the other side and begin to break down. So where we expect that dollar is going to go weak. So but what we are seeing is that this thing has not entered this area for a big fall, and it looks rather too shallow for it. It seems it does not enter this area. Anything around this area and a price action around this area would have, made us believe that it is time to go up and finish with 5 or 5. I mean, the 5 or 5, which is the last leg. I mean, sorry, to finish with 5, because once you finish with 4 to the downside, you're going to run a time 5 waves again to the upside to finish it. And that 5 wave is going to be within this area. We are saying that 5 wave is going to run in between this area. That is where that 5 wave should run. That is what we are saying. That is where we expect that 5 wave to run within that entire space. And we are not seeing that 5 waves yet. So if you remember, I've been saying that this is like we are correcting big 4, or is that we have not finished? Definitely, from what I can see and looking at the super cycle, or sorry, and looking at the cycle, big cycle, then we now know that we are actually in the periphery of finishing this. So this actually will go and qualify for the last wave of 3, 5. And so we are doing the 4th wave to say we're going to finish the 5th around this area. So we're still going to break this point one more time. But is it now, is the price ready to break that now? I don't think so, because these rather look too shallow. The price should at least be within this zone for it to turn to the upside. That is the sentiment. That is the way I want us to think, regardless of what we are saying. It's too shallow. So we are going to go inside of that to engage our thought. Let me take this one closer here. Okay. So, well, this is the daily. This is the daily. And this is what you see, you know, Euro USD, it's more or less a reverse of DXY. So, or the reverse of DXY. So now, if you want to go inside of here to look, now this wave is coming to this downside. We need price to break beyond this one. And this is where it's kind of getting funny. Price is seen to be trying to pull out from here and to break outside of it. Now, the only thing we now need to do, seeing this, is that the 4th should turn back from here, and it is far away from it. Let's now look inside into the 4-hour to see. Now, what if this one came down like a 5-wave structure for sure. It came down as a 5-wave structure. It came down as 5-wave structure here, and it ended here. Or like a correction or a 3-wave correction. I think it's a 3-wave correction. So that is the way it's looking like. It came down like a 3-wave correction here. So if you see, this is 1, this is 1, and a 2, and a 3. That's like a 3-wave. So it's a 3-wave. So this one can be 5 waves or anything, and this one will also be a 5-wave or anything. But this is a flat in between. So we have a flat in between. Now, with this, the way this one went up, because this is shallow. This is shallow. It has not entered this zone. It's suspect. It's suspect. So this might end up being an A. Let me come and give you that. This might be an A or a W. You can say a W. You can call it a W. This might be a W. This might be a W, and it could be an A, whatever. It could be an A, it could be a W. And this may be an X going up. This may be an X going up. Before we have a Y. Before we have a Y. Before we have a Y, that we probably turn down into this zone. So now this is what, interestingly, it's I'm saying. This is what I'm saying. Regardless, yes, because this one went up like a five-wave structure. This one went up as a five-wave structure. I want you to see the analysis. This one went up as a five-wave structure. Now, it means that most likely we are going to have this X as a zigzag in between. That is what I can see, because the 3-5 here ending as an ending structure means that the wave 3 of that big 5, which is of the big cycle, has finished there, and so this is the fourth wave that we are seeing. But the fourth wave is far from finishing, far from over. Is far from over. Is far from over. So because a 38 should be here and a 50 should, no, this is a 20 something. This is a 23 point something and a 38 is down. You can see this is 23 and this is a 38 and a 50 is deep down. Even though we are not expecting that it's going to do a 50, but at least with what we have seen and the kind of correction that it has done on a grand cycle, we expect the price to still go more bearish and fall and come a bit more than here. So with that said, now this is wave A, and this is pretty much like a five-wave structure. And this one had come down like a three-wave structure. You can see. Let me see. So it's a three-wave structure here. This is a five-wave structure. If you go inside of it, let me go back to go deep into 1 hour. This is the best opportunity that you can ever have. So you can see like a 1 and a 2 and a 3 and a 4 and a 5. So a five-wave structure, and this one is more like a three-wave structure, a 1 and a 2 and a 3. So which ended that wave that on the 1 hour as a three structure, and we are now seeing another wave to the upside, regardless of what this one is going to give us. So because this one is a five-wave structure and this is a bridge in between, so this one being a five-wave will make me think of at least a zigzag to the upside. And that is the way we must engage this thing. We can only engage it like that. So it's going to be a zigzag. So this is going to go at least 100 points. I don't know if it's going to do 123. So if we see any, so where is that 100? So let's see. Let me go back to the 4 hour. So that is changing it for me, for us to understand what we might likely see. So in that case, because we are now looking at this entire correction in between here to know where we are going to be seeing a change of pattern again to the downside to finish Y. And if that is the case, if you are looking at Y, it means that Y could do, because this one is in the middle, we might have like another 100 to the downside, or if not up to that. But the way the leg also comes down will determine what we're going to get. So if we finish this up now and say, where do we see the 100 extending to? So we start from the beginning of A, which is the W, the end of W, to the end of A, back to the beginning of B. And seeing this here, give us a structure of, this is 100 and this is 123. So this is the blue zone for me to the downside. Any price action here, I want to take to come down here. So if we now say that it's going to stall at 100 here for us to have a C and to complete Y, then we now connect this to the end of X for Y to go more bearish. That is what we are saying, because we are correcting a major fall. So it's a major fall that I'm still seeing, and I still see a big leg down after the correction of X. So we're going to, it's safer for us to do an X in between here. It's not going to go all the way up. I don't see that from what I can see here. If you're not careful, you can do this and say this is 1 and this is a 2 and a 3 and it's going to go. But what is safe for anybody and is conservative enough is to look at this. And if the price now breaks beyond here, then voila, you now know that yes, it's going to be a motive way, you know, or yeah, it's a motive way to the upside. But for now, being conservative is don't push your luck. This is where you want to double. So, and we'll now see what happens thereafter. So now going inside of 1 hour, then if it's stalled here, then we can say now we connect our Y, W to X to give us Y. We can now say that, okay, we are now going to get something like this. The beginning of W to the end of W to the end of, if X stalled there, so we now say our 100 here or around here. So we can now define where exactly the blue box is going to be here, which is in between this 100 and 123 here. So that's, but we have to finish up this one first. But I'm just teaching us for us to see how we are engaging. So this, for me, has captured a whole lot for you to see as we are trying to deal with price right from the cycle to get to this point. And you can't have it better. I don't know anyone that will be so comprehensively, you know, take it from the cycle and spin it down like this. It's a joker that you won't get from anywhere. It's a joker, and you are lucky to be with me to experience this. Now, so with this, I haven't said this. So like I said, we look at this again to know where X is going to be. So actually this one, it's a bit down. Let me look at the base of it. The base of it is actually here. The base of it is actually there. You know, it's not easy picking this thing pinpoint. You have to allow, it's only when you go inside, that's when you know that, yes. Yeah, I think more like that. So that's a B. So if this is a B, then let me now do this to know where it's going to fall if it's correct. So from the beginning of A to the end of A that we have seen, back to a B to get a C. A C is actually, yeah, I'm correct. It's a C is here, which is 100 here, and a 123. The 123 is going to be here. So here, the 123. So this is pretty much where we expect price to, you know, even though this is a blue box, this blue box is not ready. The bigger blue box is not ready. So you must know that where we are going to have a complete change of pattern is not ready. So this is how to look at it. We are picking it one after the other. So what we are telling ourselves is we should be seeing a move to the, you know, towards the downside from here again. That is the zone for us to go down and a break out of here. Then this is how beautiful it can get. So you know from the structure and what you expect, looking at the cycle and what we have here, we know that this is not complete for 4. Then you must know it's not like, oh yes, it's complete, but the theory of what you know tells you this cannot be enough to have corrected that 4. You know, that 4 is not complete. That 4 is not complete. It's not complete. That 4 is not complete. And if you watch this video and over, you understand how we got here. That 4 is not complete. It's not complete. That 4 is not complete. Again, let me show you quickly a recap of what we have done. You know, a recap of what we have done. So you can see again a 1, a 2, a 3, a 4. And with these 3 and 4, we're able to get the limit of this blue box to the upside, which is still going to take a while. And we now focus more inside of here, and we pick this 5 or 3 to the 2 to know that this is where this one is going to be. And we were also able to know the limit of 38 and days. But where exactly is going to fall within this blue box here for us to turn to the upside and break above again before we finish up this move, if it's not truncated. Mark you, look at this point again, when we add a 3 here and a 3 here and a 4 here, to have a 4 of this wave, you can see the 3 just went up from this initial move here, went up through, get to this point, and we now have more of a stupid correction here, where you have like a 4 here, and this one came down to now do a 5 here. To now do a 5, this 5 was truncated, and you must, that also can happen here. But now looking at the internal structure, if 5 is going to the upside, we will now tell if it's going to be truncated or not. And that's what you must be ready for. You must be ready for to engage the internal structure. So we are not counting the inside of 5 yet. We have not even finished the 4 of this particular wave. Yes, we have not. This particular wave is what I'm talking about from here to here, not this 4. This 4 is done with. But this one, which is the very last leg of the last wave that we are doing here, is what we have not done the 4th of it. And pretty much that is what I've shown us. We are going to see how the day we break below here, and of course we break below here, signifies the end and of the structure, and we are doing a new structure. Probably we are going to the downside, because the natural place that this thing has been going is down and not up. That's the natural place it's been going, not up. Now, that said, we see how now let's now go and look at Euro USD. Euro USD is going to be a bit, it's almost the same. They're going to forgive because I put all drawings here. So let me see. Euro USD, it's almost the same in terms of structure, but it's just the other way around. Now that's Euro USD. So from here, you can see pretty much from here, DXY is even more is elongated here. So you can see after this wave, and it's been correcting to the downside. So Euro has been, you know, probably with more strength and all of that, and it's been coming to the downside. And this is like a 1 and a 2 here, a 2 here, and a 3 here, and after a 3, and this is like a truncated 5, just like I told you, which has finished 5, and from here, from the 2 to a 3, we get a 4 here, and a 4, we can say an A of a 4, a B of a 4, and the C of a 4, and this is the very last leg. And you cannot say, okay, where is the blue box is going to be? And you get the blue box if you know that this is like a 3 here, a truncated 3 here and a 4 here, it should give you 123 and 116. So we are telling ourselves it's pretty much the same thing. So if, and I'll take that back here because that's what I can do. So you can now see a 1 and a 2. It's a bit different because it's more corrective, but I think Euro US, I mean DXY will pretty much give us an idea because this one is more compact and more corrective in itself, you know, but we are not going to miss it from here to know where it's going to be. So with that said, we know that this is where it's going to be. The blue box to turn more upside is going to be in between here. So the blue box to turn more upside is going to be in between here. But the blue box to turn more upside is going to be in between that place. And now, to further break it down to where we are going, it is the internal structure of that wave there. Just like we said, that we believe now that we have finished, this had finished here. From what we are saying, we believe that this had finished 3-5. So it's not 3-3 anymore. So this one actually had finished 3-5. So we can relabel this as a 3-5. So we can relabel that this has had finished 3-5. From DXY, you know, gave us a leverage to see that. So I'd finished that. Forget about this. Okay, I'd finished that. So from this purple here to this purple of a 2, where do we expect at least this thing to be? So from that to this purple down here. So the blue box is in between here and here. So this is a 23. That is a 23 there. This is of no use for now. So this is a 23, and this is a 50 that the price must not. So we expect the fourth wave to turn within this blue box. So, and that blue box now will now be this. This is where we would expect wave 5 to start to the downside. Wave 5 should start in between this place to the downside. Wave 5 should start in between that place to the downside. Okay, so the same thing that we did on DXY. So we still expect that this thing is still going to go up bullish, but not immediately. We have to finish what we are saying now. It's interesting, right? Very, very interesting. So, okay, let me know. So it's very interesting. So with that, we're going to be looking at the inside structure of where we expect that this thing is going to eventually turn down again. So if we go to the 4-hour now, so with the 4-hour, we know we are still coming up here, but not immediately. So where is this one going to stop? So we see this as an A, this as a B, and the C should come here. So with this, the same thing we did for Euro US, I mean DXY, we should not go ahead of ourselves. We should not go ahead of ourselves. So we should expect that this is a zigzag, and a B, and we should do a C. And that's the least we can expect now. So if I were you, all that is going to change. So we know where to on the structure. I just saw the big cycle, at times we get lazy, so it's not easy at times. So let me just take away this. We don't need it. So which now means that this is 100 here. The 100 is here. And this is 123. So if it's going to be like that, so we should expect our blue zone again to turn upside around this area. That is a blue zone to turn up. So that will be a blue zone to turn further up. So if you're going to turn further up, with what we have said of, so we now said that in that case, this would have been a W. The O move here will be a W, and the X will finish itself around this area and will turn further upside. Will turn further upside. That is may likely well be it, because this is also too shallow. This is too shallow to correct for. It's the same. But if the price should break below here, below this point, then most likely we are doing 3.5, and that 3.5 has not ended, but I doubt that much. That 3.5 has not ended. I doubt that much, because the way and manner this correction had gone, it can only be that we just push to this level. So I'd always given us 1.005, and what I can see here is 1.007. So we can just stall at 1.008 now, and we'll watch if the price is going to go, towards 1.003, and we look for whatever is going to happen in this zone to turn more upside. It's safer that way. And if price pull beyond here, we look at the price action to know that the price is going to go further down. So that makes a whole lot of sense to me than anything. So having said that, so we said this now, it's a W. So it will end up being a W. It will end up being a W. It will end up being a W. And this in the middle will now be a zigzag, which is an X, is WX1. An X, and the X should be around this area. Then we now have a Y. We now have a Y to the upside. And in that case, if it's going to go to the upside, then it's going to come right inside this blue box here. So, and in that case, if it's going to work like that, what we are saying is this. We are saying is this. So the way I manage this one, it's trying to breach 50 here to the upside from here, if we are seeing this as a five wave, and this being an ending diagonal also, it speaks volume really. So it means that our y will now be from here to W, then to this area that we expect a completion. So which will now put our entry around here, or 123, which falls right at the edge of here. So let's say how far this one is going to go. Let's say how far it's going to go before we know where we're going to be in this zone, which is here and here. So we know early days. So that's how to think now. So with that said, that brings me to the end of today's video. That would help us to navigate, around USD pairs to see what we are. So what we are saying is that the strength that dollar most likely will gain is going to be for a short while to fall to this level before it bounces up to go up. And when it's going up, it's not as if, oh, we have changed trend. It's still corrected to finish for. Then we're going to be seeing the fifth wave to come down and enter this zone. So that means it's going to go past all these boxes. If that happens, it's going to go past, and we're going to see it turn down, here. So it's still huge. The movement here is huge. So you don't want to miss anything around this place to come down before eventually we now change the trend. So I won't say that I end this on a high note for you, and you should see more clearly than anything again. So bye-bye.